Former Massachusetts Governor Mitt Romney recently released a copy of his 2010 federal tax return. A complete copy of this 200-plus page document can be found on his campaign's website. The governor is simply one of the wealthiest individuals to ever seek a party nomination for president. We can see on page 1 on line 37 that the governor reported over $21 million in adjusted gross income for 2010. Most of this came from investment income. On line 8A, the governor reported over $3.2 million in taxable interest. On line 9A, over $4.9 million in dividends, and on line 13, over $12.5 million in capital gains. What's also interesting here is that on line 7, the governor reported absolutely no wage income. So apparently in 2010, the governor did not earn a salary. Okay, back to the capital gains. Let's go to Schedule D for more detail. On Schedule D, we'll be able to see that most of the capital gains came from pass-through entities, including partnerships and trusts. Statement 12 has more detail, so let's go to Statement 12. And on Statement 12, what we'll see is a list of the various trusts and partnerships that pass through the large capital gains amounts. The trusts are the Ann and Mitt Romney 1995 Family Trust, the W. Mitt Romney Blind Trust, and the Ann D. Romney Blind Trust. We'll also see these same trusts on Schedule B. On Schedule B, we can see these trusts listed here in Part 2 passing through large amounts of dividends. And also on Statement 8, let's go to Statement 8. Here we'll see the same trusts again passing through large amounts of interest income. So, in short, like most wealthy individuals, a majority of their assets are not held directly in their names, but in various trusts. Okay, continuing to page 2 of the return, we'll notice something that's been very prominent in the news lately, which is the effective tax rate that Mr. Romney paid during 2010. Here we can see that the total tax for 2010 for Governor Romney was just over $3 million. And when you divide that by the income here of $21.6 million, you arrive at an effective tax rate of 14%. Now, this rate is very, very low, and it's very low for two reasons. First, if we go back to page 1, the large dividend and capital gains amounts are taxed at a very low and a very favorable rate of 15%. And this is opposed to ordinary income, which is taxed at 35%. So you can see the large difference in rates. And secondly, on Schedule A, we notice that the governor was very charitable during the year and gave away almost $3 million to charity. And Statement 5 will give us more information about the recipients of the donation. So let's go to Statement 5. And on Statement 5, what we'll see is that over half of the donations went to the Church of Latter-day Saints, also known as the Mormon Church. Okay, one more interesting fact is on page 21 of the return. On the foreign tax credit calculation, we notice a large amount of foreign source income. So apparently the Romneys hold substantial assets, substantial non-U.S. assets. Okay, so that's a very simple analysis of the governor's 200-plus page return, and for a full copy, full copy can be found at his campaign's website.